What's up, guys? Today we're talking a little bit about technical analysis. I think it's important as a crypto investor to learn a little bit about technical analysis because it tells you how to read the charts correctly and it could help you decide where to be more risk on or to be more risk off, for example, in a overheated market condition. If you guys are new here, my name is Richard. This channel is mainly about yield farming and how to generate passive income from crypto. So far, I've had a pretty good track record when it comes to yield farming crypto. If you guys look at my main portfolio, it's sitting at 3.7 Ethereum profit, as well as my hot wallet that holds a lot of my closed position is sitting at a 8.6 Ethereum profit. These numbers fluctuate over time, but if you guys look at comparing against holding in the market, I've been able to beat impermanent loss pretty consistently here, and hopefully these videos would help you become a better yield farmer. So in this video, I will go over three main ways that I use technical analysis when it comes to yield farming, as well as some tips that have helped me in the past. So hopefully these would help you make more profits and avoid losses when you guys yield farm. And just a quick disclaimer, none of this is financial advice. Please do your own research before making any investment decisions. So the first way I use technical analysis is to get a pulse on the market and see kind of where the market is heading and what it's currently doing right now. The price of an asset tells a story, right? If we look at Ethereum's price here, you could see a big drawdown of Ethereum from 4,000 all the way to sub $1,500 compared to Bitcoin's price action, which has done pretty well in comparison. The main reason why is because the market has been largely risk off when Trump announced the tariffs. So there hasn't been a lot of certainty in the market. That's just one example, right? And depending on which crypto or altcoin you hold, you can kind of see what's happening based on just the price action alone. So to stay on top of the market, there are quite a few charts that I like to look at. The first one is the Bitcoin chart. Bitcoin still leads the market, right? As long as Bitcoin is strong, the bull market is still intact. And there's still a chance for altcoin to recover, in my opinion, as long as Bitcoin still stays strong. When the risk on market comes back again, a lot of altcoins will start to trend up over time once again. And the second chart I like to look at is the Ethereum's price. Ethereum draw down quite heavily like a lot of altcoins, but now it has reversed. Hopefully it stays up here and then moves back up to retest $4,000. That's still my base case and my market outlook, especially if the Fed starts to cut rates. But the main reason why I like to look at Ethereum's price is because a lot of altcoins actually use Ethereum as a co-asset when it comes to its on-chain liquidity. If you guys look at the assets I'm yield farming, for example, Pixel to ETH or MOG to ETH, AIXBT to ETH here, a lot of these assets use Ethereum as a co-asset. So if Ethereum is struggling to do well, a lot of these assets will struggle to do well as well. And the way you guys can think about these assets is that these assets are actually priced in Ethereum. So if Ethereum doubles in price from its current price, for example, from 2,400 to roughly 4,800, assets like Pixel, which is a smaller cap gaming token that I'm bullish on, would also double in price in US dollar terms as well, even if no one has actually bought any Pixel, right? Because the way it works is that Pixel is being paired with Ethereum in the main liquidity pool that's on chain. So Pixel would automatically jump to 0.06 cents. In this case, if Ethereum doubles in price and no one actually traded Pixel, if we're looking at dollar terms, right? So that's why I like to look at Ethereum's price. When Ethereum is strong, usually a lot of altcoins are strong as well. So that's why I like to look at it. But another chart that I think is important to look at is this others chart. Others is basically the total market cap of crypto, excluding the top 10 crypto. So these are the larger to mid to small cap altcoins all summed together. And when the others chart are struggling, most altcoins are trading at a cheap price. And if you guys are yield farming altcoin pairs, we want to try to enter when the altcoins are cheap, rather than at the peak of the altcoin market price, right? And then if you see a big drawdown, your whole portfolio will see a sharp drawdown as well. Because your portfolio is made up of these underlying assets, like for example, if I yield farm Bonk and Ethereum, and both of these tokens actually loses its US dollar value by 50%, then whatever funds I have in the liquidity pool would draw down by 50% in US dollar terms as well, right? So that's why this chart is important. Those are the three most important crypto charts in my opinion. But there are some other ones as well, like Bitcoin dominance. This basically shows how much Bitcoin is made up of the crypto market. Right now, Bitcoin makes up of 65, 66% of the total crypto market. And when there's altcoin season where altcoins outperforms Bitcoin, we will see a huge decline in Bitcoin dominance here, like we saw in the past two cycles. That's typically when the market is really risk on. There's a lot of liquidity in the market. So then people buy more speculative assets like altcoins. And another chart I like to look at as well is the stable dominance chart. It's the USDT and the USDC chart. Basically, it shows you how like these two major stablecoins are moving in the market. If this draws down, it means that a lot of stablecoin liquidity is going into the crypto market. So that's something to watch for as well. We don't want this to spike, right? Because it means that a lot of people are selling their crypto into stablecoins if we want these crypto assets to move up in price. So those five charts are the main charts that I mainly look at. But there are other charts that I look at as well, like for example, Ethereum and others. If I want to look at how overvalued or undervalued Ethereum is compared to the rest of the altcoin market, you can see Ethereum has been underperforming most altcoins since 2023 and recently has started to reverse, right? So that's an important trend shift to know about. So that's why I keep up with this as well. But you guys could compare like a lot of different charts, like for example, ETH to Bitcoin, right? If this moves up, it means that Ethereum is outperforming Bitcoin. That's also something that you want to look at if you're an investor into Ethereum or if you're providing liquidity for this specific pair. Stuff like Solana and ETH as well. And you could compare like thousands of different pairs, right? But we want to make sure that we're focusing on like the tokens that we're yield farming and kind of keep up with all of those charts. For example, if I'm yield farming Bonk and Ethereum, I might be looking at Bonk in the US dollar price, see if the chart still looks good, right? Currently it's trading in like a zone of support here, and hopefully it breaks higher. If we look at the Ethereum chart, we could see that it's also at a zone of support here. So if I were to actually enter into a new position, then I would be much more comfortable entering here because I know that Bonk is at a relatively cheap price compared to if I just enter in this zone of resistance, right? Or all the way up here in the previous high. And in addition to that, I like to look at other markets as well. For example, the gold market. We could see that gold has been strong for quite a while now because the market has been pretty uncertain. A lot of people were anticipating that the US is going to print more money. So that's why gold moved up. It's an inflation hedge. And there's also a lot of uncertainty in the market. And gold is also a hedge against that. But recently we saw a pullback here and hopefully it reversed to the downside or at least moved sideways. And what I also look at is the S&P 500 because they make up the majority of the stocks market and stocks is considered more of a risk on asset when it comes to traditional investments. So if this move up, it's a great sign for crypto because people are taking on more risk. Rather than if it's selling off, then crypto is most likely selling off as well. And what I also like to look at if I invest in a lot of altcoins, which I currently do, is this Russell 2000 index, which makes up of a lot of smaller cap US companies. We could see here that it has been struggling for quite a while now. It hasn't broken its like previous high in 2021, quite similar to how Ethereum is doing. It hasn't been doing that well. And I think if this chart keeps moving up, then we could probably expect smaller cap altcoins to move up as well. This is an even better indicator for risk, in my opinion. And when this chart is really cheap, a lot of times the market is risk off, and that's a great buying opportunity as well. And the last chart I like to look at is this 10-year government bond yield chart. When we see the yield declining, it usually means that the government are cutting the rates. And this usually puts like the asset prices upwards, right? because it injects more liquidity into the system. If we look back here when the Fed started to cut rate in 2015 to 2016, if we overlay the Ethereum chart, which is the blue line, you can see Ethereum rising higher. And then eventually when the rates start climbing back up, Ethereum's price started to retrace, and then we saw a bear market, right? And then when the rates came down again, back in 2020, when the Feds printed a lot of money, we could see these asset price moved up once again. So if we see a similar move back down, I would expect that the altcoin market will move back up again because there would be much more liquidity in the market. So that's the main way I keep a pulse on the market. I find it helpful to stay on top of the market, especially if you guys are managing like 6, 7, 8 figures of portfolio in crypto. So those charts are really important. And the next thing I like to use technical analysis for when it comes to yield farming is to look for a good entry. So currently my favorite way to actually look for an entry is simply like a horizontal line of support. So if I draw like a horizontal line here, I could basically figure out like where the price are likely to bounce. For example, for Ethereum, a strong zone of support here is around 1500. So I could draw this line here. And if prices do get down here again, then I would be much more comfortable to buy rather than buying like near the top, right? So that's the first area of support. Another area is this $1,000 mark, maybe a little bit higher here at 1100. The price has bounced twice here in the last bear market, and it would be an even better buying opportunity here, right? I personally don't think the prices would reach back down here unless something really bad happens to the market and the whole market sells off. But I found that like the horizontal area of support is much stronger and much more reliable than like a trend line support. So what a trend line support is something like this. If I draw like a support line here, you can see that the price first like reached this trend line here once, right? And then touch it like twice, and then the third time here, and then the fourth time here, and then it eventually broke down the fifth time here. So if you guys actually bought into like this trend line, then you would have made money like this first time, second time, this third time. But the fourth time, if you bought in, then you would have lost money in this case, right? So it's not as reliable in my opinion. I still sometimes use it, but I would go in knowing that there's a much higher chance that this trend line would break compared to a horizontal line of support here. And sometimes people draw like trend lines really differently, right? I use the logarithmic chart. Some people use like the, normal chart. So the lines would look slightly different. So it's much more subjective rather than objective. And this works exactly the same way in crypto to crypto pairs. For example, this is Bonk to Ethereum. I entered into this pool a few months back in this horizontal green line here at around 0.00006. And you can see the price actually dipped below the entry right now. If you guys go back to my wallet, you can see it here. It's suffering a small divergence loss. I'm still up because of the fees that I've earned. It's not a big deal if I expect like the price to recover, but this horizontal line of support as an entry is a much better entry than a trend line support, right? If we go back to the trend line and we draw this supporting trend line here, if I entered like back up here or up here, I would have suffered much more losses, right? If I entered up here compared to, way down here. And again, it's much less reliable in my opinion. So that's one way to use technical analysis to basically find like a zone of support where the prices are bouncing. If you guys look here, the price bounced here, it bounced here, it bounced here again, and then it bounced here again. And recently it bounced here once again. So this is a zone of support here that we could look for an entry, right? And another way that I like to use for an entry is when the prices are trading above the 20-day exponential moving average and is crossing this 50-day simple moving average here, which is this orange line here. So when this blue line crosses this orange line, especially when the prices are weak, then it's a pretty reliable like reversal signal, because the only way this could cross is when the price basically has been moving sideways for a while and it's starting to trend up. That's the only way these two moving averages are going to cross. If you guys look back here, it never crossed back up here, right? Because the price actually tried to reverse and then got sold off once again. So that's another signal that I like. Sometimes though, it's not that clear. You can see this cross here and then it kind of moved up and then got sold back down again. It crossed back down and then crossed back up once again. But it might look a little bit more clear on charts like Ethereum here. You can see back in 2024. So we see that the price actually moved sideways for a while. It crossed up here, crossed back down, crossed up here, and then crossed back down. And then eventually it actually reversed to the upside. So when you guys see the cross, we know that it's basically moving sideways. And then we know that eventually it could have the strength to push back up if people are actually accumulating this token at this level rather than it being sold off, right? Compared to the price action that we saw in the last few months, you could see Ethereum actually got sold off pretty aggressively here, dipped below 1500 for a brief period. And then you could see this cross again, and then a bounce upwards to almost $3,000. And again, this signal is stronger when the prices are cheap. For example, this orange 50-day simple moving average is actually at a low price point, then this is a much stronger signal. Compared to back in May 2024, you can see it actually crossed up here, right? But the prices are a little bit overheated, so it's not really a reversal signal in this case. So that's one way to basically look for your entry is you want to wait for a reversal signal before you enter. And when you guys do that, it's a little bit safer than trying to catch a falling knife, right? There's a saying in the trading community that you don't want to catch the falling knife, meaning that you don't want to buy in when the token is aggressively trending down, right? Like for example, in the last few months, Ethereum has been trending down pretty aggressively here, and you could have waited for a reversal signal to start buying some more Ethereum again. But what you're giving up in terms of safety is that you're not going to get like a really good price in that case, right? Because you're not buying down here near $1,500. You're waiting for a little bit of strength before entering into your positions. So that's something to keep in mind. If you guys are waiting for a reversal before entering, then that's kind of what you're giving up. But if you actually waited for a reversal back here, it's still a better entry than if you were buying at this zone of support here at $2,200 based on the previous price action in 2024. And one thing to also realize is that we're not going to get the perfect entry, right? If we just backtest our entry and exit with the perfect entry and the perfect exit, then everybody would be multimillionaire from trading crypto. So realizing that, then our goal shouldn't be to time it, right? Our goal is to buy when the prices are cheap based on the fundamentals or like based on the previous price action. And when the prices are a little bit overheated, then that's when we start taking some profits. Another thing that I like to look for is using this MACD indicator here, especially on the weekly chart. What I like to look for is when this histogram starts to shift from like a dark red to a light red, then that's potentially a signal that, the price action is slowing down, the selling pressure is slowing down. So then that could be a potential entry as well, especially if this wave is big, right? Compared to like a very small wave here, back here, this is not as strong as a signal that has like a large wave here. And even in the last bear market, we see false signals sometimes where there's like a curve here. But because there are market fundamentals that actually crash the market, it was a decent signal, but then, it got sold off again. And then back here, this second time where the color shifted, it was actually a great entry to get into position before the prices start trending up again. So that's one signal I like to look for on a weekly chart. And what I also look for is this MACD cross here. If this blue line is crossing over the orange line, we could see that the price action has been moving towards the upside. That's not really an entry trigger for me in the weekly chart. It just shows like more of a reversal pattern. And if we drop back down to the daily chart, what I also like to look for when it comes to entry on the daily chart is this blue line crossing over this zero midline. So when this happens, it means that the prices have been basically reversing to the upside. You can see when it's being sold, these two moving averages are below this zero midline, right? And then when it crosses over again, that's when we know the prices actually started to trend up again. And that's the definition of an uptrend, right? It's trending up, setting a higher high and a higher low. And that's the only way that these moving averages are going to move up over time. And we could see a bunch of false signal as well. Like back here, it crossed over and then it crossed under again and then crossed over again before moving upwards. But in any case, when the prices are cheap, usually these signals are stronger and the price tend to reverse the upside when the market is bullish once again. And lastly, what have helped me in the past is to look for reversal patterns when it comes to an entry. So if I'm trying to enter on a reversal here, I want to try to spot that pattern, right? One really strong pattern is an inverse head and shoulder. What it looks like is something like this, where the price drops and then pumps back up a little bit and then drops back down. So that's the left shoulder. This is the head and then it pumps back up here. Sometimes the shoulder is going to be uneven, right? This is the right shoulder, and then it pumps back up again to break through that inverse head and shoulder. And then recently it has tested this neckline here. So this actually flipped as support, which is a really bullish sign. And hopefully it breaks back up once again. So that's the inverse head and shoulder. Let's try to look for another inverse head and shoulder here. Here's one on the Bitcoin weekly chart. Back in the last bear market, the price went down here to 17K, right? It pumps back up again. So that's the left shoulder, comes down here for a head, and then comes back up again, establishes this right shoulder here. And it's not going to be like very textbook clean, right? It's going to look something like this. It breaks above that neckline here. If we draw this horizontal line, this is the left shoulder, this is the head, this is the right shoulder. The price stays above this neckline, tested it twice, and then started to move back up again. So this is a great sign for a technical perspective. If you guys see this pattern, one entry that you could look for is simply this test of the neckline here. If this holds as support, then we could enter on the next candle. For yield farming or if you guys are trading, that's also a great entry. And another strong reversal pattern is a double bottom. If we go back to the Ethereum weekly chart here, in the last bear market, Ethereum's price action looks a little bit more like a double bottom rather than an inverse head and shoulder. You can see this one bottom here and then the second bottom here. And then the price has been basically trading above that ever since, right? So that's the two main patterns that I look for, that I know that the reversal is probably coming and the price action would remain bullish until that pattern is basically broken. And the third way I use technical analysis is to look for an exit. So the way I look for an exit is the same exact way I look for an entry, is basically the opposite, right? The first one is again the horizontal support line. Now it becomes the horizontal resistance line. So if I want to take a little bit of profits of Ethereum, then I could draw like a horizontal line here, let's say at $4,000. It touched this price point once, twice, 3 times, 4 times, 5 times, right? So that's a clear sign of resistance where the price has been selling off. A lot of investors or traders basically take profits at this level. So I could expect that there's going to be some resistance if the price actually recovers back here again. So that's one exit that I could aim for. And a lot of times I want to kind of front run these exits a little bit, right? I don't want to hold most of my Ethereum all the way to $4,000. I kind of want to start selling maybe near like 3,500, slowly up to $4,000 or shift my yield farming strategies. For example, right now I'm in mostly crypto to crypto pools to accumulate more crypto. But if Ethereum breaks above $3,000, for example, then I might start using more crypto to stable pools to basically like reduce my risk and also have less volatility in my portfolio and maybe introduce some hedging strategies as well. It's probably a little bit too much to like go over all of it in this video. I could make a new video on that if you guys are interested, but the main idea remains the same, right? If I draw a horizontal line, it should touch it a couple times, and each time it touch, the price basically sold off, right? And just because the pattern has been true in the past doesn't mean that the pattern would hold, right? This could easily break above that and it could flip as like a zone of support. Then Ethereum moves up higher to, let's say, 6,000, 8,000, or even $10,000. And the previous idea that we were talking about holds true as well, right? The MACD, the moving averages, when the 20 EMA crosses over the 50 EMA, that's typically a bearish sign, and we could probably expect some retracement here. And when the MACD flips from like the dark green to the light green, that's also a sign that the momentum is slowing down. And one last thing I forgot to mention is the RSI. I use the 25 period RSI to filter out the noise because if it's too low, I find that it's a little bit too sensitive. I'm more of a long-term investor rather than like, a day trader or a short-term swing trader. That's why I use the 25 period RSI. What this actually measures is if the token is oversold or overbought based on how many people are in profit in the previous price action, right? So when the price is trending down, then it's very likely that people that bought recently is in a loss, which means that they're not as likely to sell. So that's a great time for me to buy in, especially when used in combination with other tools that I just mentioned, right? Like the MACD and like the zone of support. We could see here there's a lot of confluence where the price action was sitting at a zone of support. The dark red flipped to light red and the RSI is below 50. So when it's below 50, that's when I'm more comfortable to dollar cost average in. When it's above 50, that's when I would be securing more and more profits. And if we zoom back out here on Ethereum, you guys could see that a lot of times during the bull market, the 25 period RSI on the weekly chart stays above 50 most of the time. And during the bear market, it stays under 50 most of the time. So under 50 is a great time to buy. And it works for every token as well, right? Like Bitcoin, when it's under 50, that's a great time to buy. When it's over 50, it's a little bit more overheated. And maybe like the price is not that great of a price to add in. If you guys are a super long term investor like I am, then we're still going to be buying Bitcoin, right? But those Bitcoin are not something that we're going to be selling in the next 6 to 12 months, right? It's something that I would be personally holding for the next 10 to 20 years. And I'd use like the same exact strategy to buy Solana back at $120. In March, we saw the RSI below 50, the MACD flipping from, dark red to like light red. And then I took profit on my position roughly at $180 here before the price started to retrace a little bit. So I hope that helped you guys out. The first way to use TA again is to read the market, see what the prices are doing, and kind of see where the prices might move. The second way is to look for a good entry. And the third way to use TA is to look for an exit. And before I hop off here, I just want to share a couple tips that have helped me in the past. The first one is we don't want to be overconfident in our analysis. I think that's where most people like get into trouble. Technical analysis is basically an analysis based on previous price action. It doesn't predict the future. It just tells you what the price has done in the past and what it could potentially do in the future, but it's not 100%, right? Because we don't know the actual fundamentals behind the market until things actually happen. For example, most of us probably didn't predict Trump is going to impose a bunch of tariffs or the conflict in Middle East. So we can't really predict the future with like certainty, right? Otherwise, most hedge funds would be pulling like 20% return per year if they could predict the market with certainty, especially when they have like millions of dollars spent into analysts on trying to predict the market, right? We can't predict the future, so I don't really try to do so. I just see where the prices are cheap. I want to be buying at that point. And when the prices are overheated, I take a little bit of profits off the table and then redeploy again when the prices are cheap once again. And the second tip that has helped me in the past is to have a hedge in place at all times and have a plan if the price doesn't move your way. For example, I'm bullish on Ethereum's price action as well as altcoins in the next 6 to 12 months. But just to hedge my exposure, I'm using a lot of my fees that I earn from yield farming to dollar cost average Bitcoin to diversify my investment or to sell some into stablecoin as prices move higher and higher. So we always want to have a hedge in place. And I could go into detail in hedging your positions in other videos. If you guys are interested in that, do let me know down below. And the third tip is we want to stick to higher time frames and think long term when we're reading charts. We want to ignore short term noise. Because as yield farmers, we're not trying to day trade here. I don't use the 1 hour chart very often. There's a bunch of noise here, right? There's a lot of different signals that are going on. We don't know, like, okay, this MACD signal, is this reliable, right? This RSI, is it reliable? There's just too much noise on like lower time frames, right? Even on the 4 hour time frame, there's a bunch of noise here that could basically affect your analysis. What I like to do personally is just start from the weekly chart, look at the price action. That should basically give me like the rough direction of where the market is going. And then I like to drop down to at least the daily chart to basically see if the analysis is the same. For example, if I see a weekly bottoming candle here for Ethereum, I can drop back down to the daily chart and see if the pattern actually looks like the prices are bottoming. So those are my 3 main tips, and hopefully this video has helped you out. If you guys found it helpful, I think a lot of these other videos on my channel would help you out as well as a yield farmer. Again, my channel focuses mainly on yield farming and how to generate passive income from your crypto. There's a bunch of misinformation out there, so hopefully these videos would give you the best information. I try my best to be as unbiased as possible and only put out the content that has actually helped me in the past. Thanks for watching. I'll catch you guys next time.